The other one that I'm looking at is Patanjali Foods. It's marginally in the green today. This is the Insight Edge segment this morning. There's a note that came in from Jefferies where they've, initiated coverage on the stock. They have a target price of 2,050 rupees. The reason why they like is because, the company has diversified away from its commoditized oil business itself. And this diversified consumer franchise is something that, as per Jefferies, can deliver double-digit revenue growth and margin expansion going forward as well. Remember, ever since Patanjali Foods, Patanjali acquired Ruchi Soya and is now moving into margin-accretive portfolios, nearly 70% of the company's valuation is now derived by its newer diversifications. So those are things we'll keep an eye out on. They first bought the foods business of Patanjali Ayurved and, the biscuits, etc. And now they recently bought the home care and personal care business as well. So all these factors working in favor of the company. What's not is the volatility that we're seeing in edible oil prices itself. Moments ago, we had Lata come and talk about that as well. So earlier today, we spoke with Sanjeev Asthana, who's the CEO at Patanjali Foods, who expects margin expansion to continue for their palm oil plantation business and 8 to 10% margin for their foods and FMCG business, along with 4% EBIT margins for their edible oil business as well. And for all those who are wondering over the weekend, is Patanjali getting into insurance? Yes, it is, but not Patanjali Foods. It is Patanjali Ayurved, which has no financial bearing with Patanjali Foods itself. And that's something that the management clarified as well. So let's hear out what they had to say in our special Insight Edge segment.
We are clearly witnessing some bit of slowdown in the imports in terms of volume terms. That is more than made up by the oil inflation that we witnessed. But broadly, for the year, we are pretty confident of still meeting between 2 and 4% of growth target on the edible oil volume. Pretty confident about exceeding 4% plus of EBITDA margin on the edible oil side. On the FMCG regular businesses of foods and non-food, there is some slowdown we see in the urban area, so that continues. But broadly, we are pretty much within the ballpark range of 8 to 10% target that we are on the food side. The HPC business is still integrating. The first full quarter we'll see in this last fourth quarter now. And pretty much we are on course to achieve 15% growth on the HPC side next year. Every year, our EBITDA run rate, what used to be about 160, 170 crores, we are upwards of, somewhere around 220 crores odd we make as an EBITDA. So every year that is spiking up. But the big growth in the EBITDA and the contribution to the revenue shall happen maybe in 3 years' time, when all the plantation that momentum that we have of last 2 years, I think will start to fruit. So pretty much from 28, 29 onwards, you will see a big expansion. And that the estimation is broadly that, if the run rate of our targeted sort of plantation size, the margin expansion that we expect to happen. So we should pretty much be nearly 3 times of where we are today in 4 years' time.
That was Patanjali Foods in our Insight Edge segment. The Nifty has now slightly slipped below that mark of 22,500. Still holding on to gains of around about 100 points, but still off the highs of the sessions, 0.5% higher now on the index. 22,490 is where we stand. Take a short break. Saumil Mehta of Mirae Asset Sher Khan joins in on the other side to give you a quick chart check as well as some trading strategies. Stay tuned.